The panel is the digitalization of assets. And we've got Christian, our co-host, co-founder of Manta, as the moderator. We've got Christoph, Ruth, Executive Director of Capco, Jean-Paul Tarud-Kuborn, partner and CCO at DekaBank Advisory, Andreas, Digital Assets Custodix, and Christian Labetzsch, co-founder of Blocksize Capital. Christian, the word's yours. Very good. Thank you very much, David. Allow me a word as the host as of today. We are quite content how the day goes so far. I hope you're all happy and you get inspired. We've been extremely impressed by the previous panel, so we have a quality to meet here today. I've chosen particularly this one to moderate myself because we're coming now to one of the, as I think, most interesting questions, and that is what works. So there are many eyes I've said in the beginning, and Alex, my co-founder, mentioned, so there is a lot of interest out there. Okay, I need capital, I have something to tokenize, I'd like to tokenize something. And there is the big buzzword of the tokenization of everything. And well, our learning is that everything probably does not make sense, but we are trying now on that panel to make some sense out of that question. And as usual, I'd like to start with a short round of introduction, and maybe Andreas, you just start something about yourself and what you do.
Thank you, Christian. Andreas, I'm responsible at DekaBank, a part of the German saving banks, for the build-up of the crypto custodian. And we start in the last year with a crypto security register. Therefore, we got the license due to the grandfathering role, and we apply for the crypto custodian license in this year.
Christoph.
Thank you. Christoph Ruth, with Capco as a partner and executive manager. We are supporting banks and financial institutions, and I'm pleased that I'm leading the digital asset area there and also the regulatory part. And I think we saw it already in the discussions this morning. One side is technology, but very important is the business and also the integration and the legacy and the regulation side. And this is where we see lots of efforts coming to us to get the chances done.
So I represent DekaBank Advisory. So basically, we are a consultancy and advisory firm for blockchain and tokenization. We help companies understand their business model with relation to tokenization. So as we were discussing, from whether it is an STO or other forms of tokenization, and we also work on corporates that are moving from Web 2 to Web 3.
And Christian.
I'm Christian. I founded 2 blockchain companies, micobo and Blocksize, and with 50 individuals by now, we provide infrastructure to tokenize assets and also trade them. We are, I'd say, less focused on corporate issuers that want to raise funds through STOs, but rather equip financial institutions with technology to issue retail structured products, tokenized, open-ended funds, and other financial instruments.
So Moritz and I, we tried to make the panels as diverse as possible, and we have different countries and so forth represented. But then throughout the course of the last week, simply by accident, we managed to create a Frankfurt Massive on this one. We have 3 gentlemen from Frankfurt here. So Frankfurt still plays a role even in the new world of finance. So I'd like to start with Jean-Paul on this round. So DekaBank, and we work a lot with your partner Mohammed Masood in Dubai. We've common client together in Brazil, and yours and Mohammed's company is basically consulting somewhat all over the world. So you're all over this. You have a very strong background in Latin America. You yourself represented Chile in the UAE, and you've seen lots of things out there. So can you give us both a little bit the perspective, maybe specifically from the Middle East and from Dubai, in terms of the regime and the approach there? And yeah, let's start with this. I don't want to overload you.
So Initially, if you're looking at it from a regulatory point of view, Dubai and the UAE, of course, also led by Abu Dhabi in a way, have been very forward-thinking in the way that they've been trying to adapt their legislation to the security token component. Not only security tokens, actually, generally speaking, digital assets. They've tried to emulate a little bit what they have seen in other places, so they didn't want to be the very first to do things, but also have been very cautious into how to adapt and learn from other people's maybe mistakes and issues that have occurred. So from that point of view, it's very forward-thinking. Dubai created recently VARA, which is the Digital Asset Regulator Authority, if you wish, who's going to issue a regulation for the UAE that in a way emulates sort of the MiCAR, but with other aspects to it. So it's a very interesting environment to work in. But from Dubai, we actually look at tokenization projects from all over the world. You mentioned the one in Brazil, but we're looking at Asia, Europe, the Americas, and even Africa, as a matter of fact. And us as DekaFor, we don't only look at the security token aspect. So, and Alex mentioned something very interesting in the previous panel, is that companies approach you and they think they need a security token. It turns out that their business model warrants for something else. And it could be a utility token, community token, NFTs, or a combination of things that are not necessarily financial securities. So this would be in a nutshell.
Very good. Let's shift over to, I'd like to continue with Christian, shift over to Germany. I mean, in general, what we see in the space, we see, especially coming from crypto, new product. And that product needs somewhat of packaging if it's a traditional institutional investor. So they prefer basically an old packaging for a new product. And then we have basically, in italics, we have old product like real estate, and that can have a new packaging like tokenization. Then we have new product that has new packaging. So you're also dealing, especially with institutionals in the space. And before we come to the question, what might work in the future, what do you see working today? What is there already a market in place?
Yeah. I'd say old product, new infrastructure. I think that's the killer use case. At least these are the use cases that we are working on. And in Germany, something fantastic happened. There's the Electronic Securities Act. And let me quickly outline to you why this is really exciting, and then demonstrate what the benefits of actually applying blockchain within that use case are. So how does JP Morgan, Goldman issue a certificate, a retail structured product right now, a knockout certificate, for example? They create a deed, okay, which is a piece of paper. They go to Clearstream with that piece of paper, and this is where the security gets dematerialized, okay? So something magic happens because a deed is transformed into a digital asset, okay? A financial instrument that's tradable. And then there's a settlement layer that is called Target 2 Securities, T2S, okay? And through issuing it and booking it into the Clearstream system, the central security depository, which is nothing else than a vault, financial institutions can access that financial instrument. But the only way, I mean, to really issue that right now is to do that through a monopoly, Clearstream. And everything has been changed by the Electronic Securities Act, because now Goldman can decide whether they go to the monopoly, Clearstream, in order to issue their knockout certificate, or to any crypto registrar, okay? And last year we did a project with flatexDEGIRO. Flatex is the biggest online broker in Europe. And flatexDEGIRO used our technology in order to issue those retail structured products, because they also applied for the crypto registrar license under the new regulation. And all of a sudden, you can give all those issuers an alternative, and you're cracking up a monopoly, because they can decide whether they go to Clearstream or whether they go to Deka, Sviat, or flatexDEGIRO. And guess what? There's competition in the market. And of course, if flatexDEGIRO can offer to do that cheaper than Clearstream, they will go to Flatex. And all of a sudden, the settlement doesn't happen on a centralized system, which is called Target 2 Securities, but for example, on any EVM compatible chain. The fiat is still settled on Target 2, which is kind of a bummer, but we get there. And this is really fascinating. And this is where I see the most benefits of applying blockchain, by simply creating efficiency gains and cracking up monopolies.
So you've given an excellent example with the crypto registrar license and what's that pushing into
into the markets. And especially in Germany, we've seen huge innovation through crypto custody license. And we've had Tangany just at the other panel. And when we look at the European landscape, there is happening a lot in Germany compared to other countries. So, and the custody part is just like, let's say, one ecosystem player of a whole ecosystem of roles that is needed to bring the security into the markets. Maybe, Andreas, you can elaborate a little bit more on your experience, how working with the regulator, having regulation in place to bring out a product. Where are we there? Is it still in the early beginnings? Is it painful and difficult, or so what would be your characterization of our at the moment the state of Manta?
First of all, I would like to say that we have some institutional investors who are not focusing the old products. They are looking for the new products on the new technology, because that was our pilot product we issued last year. There were crypto securities issued on the blockchain, on our blockchain, and the investors invested direct in it. So no paper, no monopoly, completely new process chain. And that is what I understand in this way. We talked some panels before about it. There's a lot of education work, what we need to do. And therefore, I think the German regulator, the BaFin especially, focused that there is a little bit more trust in it, that there is a little bit more education in it, because the process is not the easiest. But I do not have any projects where I work better together with our lawyer, and that it was very intense in these both license processes we have. The BaFin is open-minded, I think. They are very fast forward in this case, I think. And I'm happy that we can get the proof of BaFin after we got the license. And this is, there's, I've mentioned it some panels before, it was a front runner, I think. And that is what I feel if I got the crypto custodian license, or I hope I got it in the next year. Because then we are approved by BaFin. We are not regulated as some other custodians around the world. And therefore, we got the infrastructure for our clients. And if anybody knows, the German Sparkassenorganisation is not such a front runner. The clients also not. And they are looking for security. They are looking for trustness. And I think the Deka is a part in this chain who is responsible for this, and who can offer this security, especially in the custodian service. But we also see the necessary, though the need. We have to go with the new ecosystem. And therefore, we decided 1.5 years before to offer the complete process chain. So from the issuance, if the pilot regime starts next year, we want to be part of the trading facility and the custodian part. And that is why we are working on it. And I think I look forward that we start working on the DLT pilot regime next year.
Well, thank you very much. If I just may add, before I come to Christoph, our own experience in working with BaFin and Bundesbank. I mean, when you're in the application process, everything takes too long, and it takes from month and month and month, and you're somewhat on an hot chair. But to say something positive about the regulator and supervisor in Germany, I think when you look at the European landscape, you have somewhat two categories of supervisors and regulators. So there are those who see new technology and innovation and say, okay, that needs a new law. the legislator need to put in place a new law, and then we can decide on it, and then we can say what can or cannot happen. In a way, Germany did that with the crypto custody law, and it enabled a lot of innovation. In our case, when we applied for our license in end of 2018, beginning of 2019, there was basically no tokenized securities law in place. And interestingly, BaFin and the German Central Bank took a very pragmatic approach and say, okay, as long as these guys apply existing capital market regulations and securities regulation, we are fine with it, and let's go and let's try it. So that was a surprising, innovative approach, and you don't see that with every regulator. And in our day-to-day business, especially when we interact with banks and other players, that has been very helpful. And with the banks, I'm coming to Christoph and his clients, because and we have with Byron Haynes and later on the innovation panel, a representative of that species, the banker, and hear more about the banking perspective. And I'd say when you're at a blockchain conference, so there's a lot of bankers bashing, and also they don't get it, and it's just stop talking to them. They love her. And you, Byron, you can work on that in a bit. But Christoph, you're talking too many. What's your feel on the market, and where do you see, what different characters do you see, and how are the traditional players in the financial markets moving towards that kind of innovation?
So I would structure the answer into part. What do I see with the German and with the not German regulation, for example? And both Christian and Andreas said it. So yes, it's a pain, and it's a lot of work to fulfill the regulation, and it cuts out perhaps also a few innovative players. On the other hand, it gives security. It gives the security also to the customers of the banks, and this is what we see very much. The very innovative colleagues, and you all are on that page, different to the Sparkassen clients, perhaps what Andreas mentioned. They are looking for security, and with the regulation, they have that security. So the market is seen as very strong in Germany. When we have a look and the view outside, a little bit more to Eastern, where we go to not only Abu Dhabi, but also to the Turkish market, then there's more question marks on how will the regulation look like. This gives more openness, but very much more question marks as said. And so they are all looking to Germany and want to apply similar rules in the hope that their regulation will look like something similar, and then they have applied it. So that's one part. On the second side, we are talking to several banks, and Andreas said that they started 1.5 years ago, and many banks started with their thinking, but with the regulation coming, I'm surprised that not more are quicker on that train, because when we think, and Christian, you might say, from a technology perspective, if you really need to do the custody, you do the tokenization, you need the infrastructure. This is not a process you do and then you have it. This is a journey which is sometimes longer than the application to the BaFin. And when we expect that, we heard it this morning in the panels, we expect in 1.5, 2 years, the customer of the banks, your customers, are ready to take that product. If there's no infrastructure, you don't have a license, and you don't have something to fulfill the wishes of your customers. And that's why I was surprised that not more of the players are now heavily thinking, at least, on the solutions. And there I see in the European market, or also in the UK, we named it JP Morgan, Citibank, a few players that are really starting off. In Spain, BBVA, for example. And I'm looking to see how many will now jump on the train, because as said, calculating backwards from 25 years of implementation practice also, if you want to be there for your customer in 2 years, you need to start half a year ago.
Yeah, I mean, definitely what we see in the space, I think it was years ago that Santander issued the first basically tokenized bond and other pilot projects. So there's a lot going on in the banking sector, and I think anyone who thinks they are sleeping through this or is mistaken. But of course, they have different hereditary systems, and it's more difficult to move them. I want to come to the whole ecosystem part of it and how complex it is in a bit later, because we've touched on Germany, and Jean-Paul, you live most of the time in Europe, but through your firm and your projects, you have also somewhat the outside perspective. And Alexander and I, we've been a lot in the US on US conferences, and we've attended Singapore FinTech Festival and others a lot, and been also in Dubai with Mohammed and others. And it's always interesting to get the outside of European perspective on what's happening here. So what is, from your perspective, taken note of out of Europe? What is looked at? What's happening here? What's most interesting, you think?
So in terms of examples that are being followed, for example, in the Middle East, I would say Switzerland is also a country that people have really been looking up to from what has been done so far. They were among the first to work on changing the regulation. Germany as well, Liechtenstein actually also is an example that some people in the Middle East are looking at. Again, we talked about Dubai being among the first to change the regulation, but not the only ones. So the entire GCC countries are actually looking at doing this as well. Creating hubs, Bahrain also is quite advanced in that. They were among the first also to have crypto exchanges, regulated and unregulated. So there is definitely a move and a push to do that, copying a little bit what's been happening in Europe, but not only. I think Singapore is also an example. Somewhat some things that are happening in the United States to a certain extent. And they're trying to just, bring the experiences of others, the mistakes of others, and trying to fit it also to a local culture. They also have to understand the local investment culture and how people are investing into, digital assets or securities in general. Now, on another aspect of that as well that you were mentioning earlier is that the investment community out of the Middle East is also investing in projects in Europe or in the Americas or in Asia. So there's that cross-border element that is still a big question mark from the regulation point of view, from how investors are going to put in their money. There was a question in the previous panel, is it going to be crypto or fiat? Why can't it be both? It should be both. And all these questions are still unanswered. So all these regulators should actually maybe have symposiums more often and talk to each other to see if they can come up with viable solutions. But it's still a mystery for many people. And on that note, a lot of companies come and say, like you said earlier in the beginning of the panel, I want to tokenize something. I need to raise funds. What do I do? And we take them at that stage. Before they reach you or you or you, they need to know what they want. Because once they can only reach you guys once they know what they want. But the problem is a lot of people don't know what they want and how they want to do it. And this is where they need guidance. And there's no guidebook. So we need to take them through that process of understanding what they want. And sometimes some business models actually could raise a lot more money with something else than a security token in their cases. So it's very interesting.
Thank you very much. That leads me exactly to my next question. It was almost like scripted. So I didn't bother you too much with prep for the panel, but that goes exactly to the next topic I want to touch on. So with a security, we have something that's inherently based on national capital market law. And whatever the innovation is and whatever the European Union can achieve, the laws are diverse and the nation states are not inclined to give up too much of that. So of course we have MiFID II, and that helps a lot. So as our license is passported in all EU member states countries, so that helps. But still, on the individual offering, we are basically locked down to national capital market law. And we've just heard the example earlier from Joybroy. So that's an offering for German investors, WIB approved by BaFin in Germany. Then there's a notification process to bring it to market in Austria and so forth. And it's not so easy to sell it to everyone all over the world with respective marketing. And that is basically the gap between what the technology can do on the one hand and how our legal system grew out of nation states on the others. So how can we bridge that? how can we get rid of that, or how can we use that in a smart way? What do you think? Who wants to take that? What could be an interesting path in the future to deal with that? Andreas?
I think the first bridge, the potential bridge, is the EU regulation like MiCA. So we come from this small part, only in the national law, make it wider to the EU. And therefore, at the moment, if you got a crypto custody license in Germany, you are focused on Germany. If the MiCA opened the market, you need to apply for the EU license. I hope you can transfer your national license, but then you're open for the European Union. But I do not think that it will be possible to open it for the complete world. Bridges maybe work. Sometimes they're not working. Sometimes they're the most unsecure part in the chain. But you have to get a white-listed ecosystem. For example, the US start with a regulated part, the EU start with a regulated part, and you get a transfer to these both markets. But therefore, you need standards, and at the moment, there are no standards.
Yeah, that's absolutely right. I mean, Brian and I, we had this lovely experience when, like, Manta got our BaFin license. We went, I won't say the country now, we went to another regulator somewhere in the EU and explained what we're going to do within the MiFID II regime. And there were like 8 central bankers at the table, and the head of the prospectus department just threw his pen on the table. I still don't know why BaFin would allow that. So they are very protective of their respective country regimes. I think at this moment, I'd like to open up to first questions. We touched on a variety of points. Who'd like to jump in and throw something at us? In the back there.
We have been speaking about target to securities earlier. Do you think they will ever clear cash through target securities? And if yes, what would be a reasonable timeline for this?
That's a tricky question, I'd say. So first of all, I think target to securities will further exist. That's pretty clear to me. I mean, this is the infrastructure that's been built over decades and that is already quite efficient, okay? But I have the naive illusion that at some point in time, we will have another more decentralized settlement and issuance layer. And I'm really a friend of permissionless protocols and not necessarily enterprise blockchains, because what they do, they protect ecosystems, okay, through technology. And I really like the approach of using Ethereum virtual machine compatible tokens. I mean, back to the question again, target to securities, of course, will still exist, but I hope that we see a parallel system, a more decentralized settlement layer for the next generation of securities. And my naive illusion is that at some point in time, that settlement layer can be used also for a custodian in Thailand or in the US to store, trade, and settle securities on the same infrastructure, which in fact, when we manage to bridge the legal systems and come up with a globally functioning legal system, allow capital markets to, grow closer together, in fact. But both systems will, for I don't know how many years, of course, coexist.
One more, yeah.
So basically to improve that, I would say to improve that efficiency and really take advantage of it of the blockchain, wouldn't we then need the digital money for it? The centralized digital money for it. And when
Andreas, you want to take this one?
For sure. There's to get in touch with the complete efficiency on the chain, you need the money on chain, the cash on ledger, or whatever it's said. So as long as we do not have a solution, we are looking or working on the trigger solution. If it's not working, you have a person with looking on the bank account and say, hey, money is there. Then the full efficiency process on the blockchain will start. But that is a process breach at the moment, from my point of view.
I would even say for the next decade, we have even more topics in regards to that. So central bank digital currency is one, but when you look, for example, at the real estate transaction, now let's imagine you have a land registry on blockchain. Let's imagine we'll have some kind of national IDs on blockchain. Let's imagine we have company registries on blockchain. Then, you know, that's basically where the whole ecosystem should develop through. And then there is a completely different efficiency gain. And I'm pretty sure we will see first countries moving towards that. And that then will be a train of innovation that's not going to be stopped. And then the nation state will have, okay, we'll have to catch up with that. We have to have that as well. And I think that innovation at some tipping point is going to be much faster. And at the moment now, so we're moving like a glacier, but at some point, at some tipping point, that glacier will melt, and then innovation, I think, will go a lot faster. Similarly, we'll hear later an excellent keynote about basically how the whole world moved from Web 1 to Web 3. And I think we will have similar effects in the financial markets.
Jean-Paul was mentioning about the countries that have been the trailblazers and the role models in this space. I was wondering why El Salvador is not looked at as a sort of a dark horse, a sort of a black swan maybe in the future. What does this panel think about its strategy? Because at the end of the day, they are also employing Bitcoin Lightning networks, which is like the next generation in that ecosystem. And Bitcoin is going to also be a future storage of value, whether we like it or not. So what is the take of this panel, and why is El Salvador not looked at with that much reverence as they may be Switzerland?
Jean-Paul, that's for you.
Yeah, sure. So there's a distinction that needs to be made between countries adopting different forms of cryptocurrencies as legal tender, as opposed to what regulators or regulations are doing, and when it comes to financial securities. They're different things. So it's very commendable what El Salvador did. They're not the only ones. Out of that, I believe there is already 5 countries that have accepted different forms of crypto as legal tender, and there's about 14 on the way. So it's gaining popularity, but this is a different thing. So the regulatory framework for financial securities is a different thing. Now, El Salvador is also doing that. They're also modifying their regulation, but they're also basing it on what others have done, a little bit like what the Middle East is looking up to some European countries who did it first. So this is basically the distinction. I hope that answers your question.
Thank you very much. The gentleman in the front.
I would be really interested in your decision framework for tokenized, yes or no, and then after that, blockchain, yes or no. I guess it's a question in direction of Jean-Paul, maybe some other guy too.
Well, it's a very tricky question, because obviously we are advocates of the blockchain revolution, so we would always try to say blockchain yes somehow, okay? It does happen in some cases that we've had to say no, especially on certain very traditional business models, industrial business models that just have still today, maybe in the future, but still today, no room for tokenization. But it's rare. In most cases, we have been able to find a way to do some form of tokenization, but as I said, it doesn't mean it's a security token. There are so many other avenues of tokenization for certain industries. It really depends on the sector. It depends on where they're located, their jurisdiction. So that's it's a very vast world out there, and it's a vast ocean, and that you need to help people navigate, basically.
And maybe if I may add to that, I think one question or one topic that's behind that is the whole aspect of decentralization that comes with blockchain. So when we look at crypto as an underlying, so we have something that is easily to be decentralized. Even if, let's say, for institutional investors, we might wrap it into a security, so we can put an ISIN on it, and their asset managers can store it in their traditional omnibus account. So that can be on another way fairly decentralized because Bitcoin on your wallet. Whereas on the other hand, a security, again, in itself has some kind of a centralized aspect, because as the investor, you want the issuer to know who you are, and maybe you expect a dividend in the payout and so forth. So both sides, investor and issuer, know themselves, and also the issuer might have an interest to know, okay, who's on my cap table, at least at a certain point, and can influence that. If you issue a security on real equity and down the line, you have some participation, not only participation rights, but really governance rights into the entity you shared equity with. And if I may add one more question, then can somebody give me the time? How much? Where are we, David? 10 minutes? 2 minutes? Finish up. Okay. A good last one. I have several more. I think. Okay, let's look at this one. Ronald Frankl brought up the question earlier of secondary markets, and that's a key one. We have several ecosystem players. We have basically the layer one blockchains. We have the technology platforms like we heard, Tokeny, and the like. And then we have primary market players like ourselves, secondary market players, custodians, and some like hybrids of different versions of that. But again and again, it boils down to where is that traded at some point. And we see a variety of underlyings, and I think my personal viewpoint is we will see a variety of secondary markets to deal with that. So shall we have one last round on that? Where do you see the secondary markets go? And you can focus on either part of the market, be it in regards to crypto or securities, wherever you like. Christian, do you want to start?
For security tokens, I don't see any liquid secondary market right now. That's my perspective. I'm hopeful that the pilot regime opening the market for security tokens will help solving that. But this is probably one of the biggest challenges to overcome for most of the tokenized securities. And this will, in my opinion, take a couple of years until we're there.
Jean-Paul?
Well, in addition to that, I think the only small, let's just say, exception would be premium assets. So when there's a security token issued on a premium asset that has limited amount of supply and of course big demand, you could see a little more liquidity being generated when it's being traded because people want a piece of that premium asset. But I think he's right. In general, we're still at the infancy of this sector.
I'm a little bit more optimistic, perhaps in the midterm, so in the 3-4 years, because especially on security tokens, and the example you gave with Joybroy, that brings a market which is currently not there, which is crowdfunding, to a place where a secondary market is. So all of the mid-sized enterprises that are currently thinking on how can I do that, I am sure in 5 years we see many of them on security tokens. And then there will be a secondary market, and I think it will be much stronger than we now think.
You have many things to add, but I give Andreas the last.
I think in the midterm, we need to wait for the DLT pilot regime, and therefore we got an opportunity to start a secondary market. And I think if we have the primary, only the issuance without the secondary market, it's okay, but it's not the complete business. So we needed that the security token will stay alive and will change from the traditional to the new ecosystem. I think so.
Thank you very much. That was the asset panel, gentlemen.
Thank you.